Hi, this is Zach Meir with the late summer bank holiday edition of the Bulletin Board Heroes here at Zach's Traders Cafe, the last bank holiday before Christmas, so something to take note of. Starting off with the FTSE 100, and here we've got double failure at the end of the last week below the old support for July. And the 7,400 mark. We failed in the 73.80s at the end of the week. That means that there's a risk of yet another test of the low 72 area, so 72.30, 72.20, which has been basically post-March support for the market. Uptrend line is vaguely rising uptrend line there from back in November, so that's a neckline support. If we break below 72.20, then the risk of a move to the floor of that falling trend channel from February as low as 71.50. So at the moment, sandwich between 7,400 and 7,150 is the message on the FTSE. On the DAX, the good news is that we're still holding on to the post-December up momentum on the daily chart. Bounced off the December uptrend line there around 15,500, although it has to be said, not very convincing. We've got a falling 50-day line, and we also obviously had that bull trap gap reversal at the top of the market there at the end of July. So that means that there's still a risk of testing the 200-day moving average, the black line there at 15,400 before we get our act together on the long side. End of day close above the 50-day line, I suppose, would snap the recent rather poor August performance. Moving on to the Dow, and rather firm rent of the week here, where the bounce off that uptrend line from October last year, so 34,000 basically the key here. Below 34,000, the risk of a test of the 200-day moving average at 33,700. We can't rule that out, given that in the recent past, the 200-day line or just below has been the low of the move. It was only in June and July that we managed to have the 50-day line as the support, but obviously we were very bullish then. Now we're going back to more of a normal mode. End of day close above the 50-day line again would get the bulls back on track. That's 34,600, but still feels a bit away at the moment. On to Bitcoin, which has also had a rather weak August, rather horrible August. In fact, here what's strange is that we've had the big fall from the start of the month around 30,000, but the market's still oversold, so still looking as if this could be a mid-move consolidation ahead of a fresh move to the downside and the floor of that broadening triangle from March as low as 23,000. But at least while we're above that uptrend line from January, that's 25,500. There's a chance of salvation and break above the 200-day line could then take us back to the 50-day, which has been the resistance over the past month. 50-day line just shy of 29,000. Moving along to the stocks and starting off with Angle, and the situation here is that we've got a couple of plus points. One is that we've broken out of that falling wedge from back in March, so around 11, well, basically call it 12 pence there, that line. And we've also got bullish divergence because we've got the lower low for the end of August, but a higher RSI trace. So that could mean that we'll have a little rebound here and above 12 pence, looking for as high as 18 pence by the end of next month, driven by that bullish divergence, which tends to provide extra momentum. A stock which maybe most people are not looking at the moment, but looks quite interesting, is Future Metals. The reason for that is the broadening triangle base and also the way that we gapped up on Thursday and we broke the high of that day on Friday. That's a decent signal on full gap to the upside, off the lows as well, bullish divergence, and then the end of day close, or the weekly close actually, back above the 50-day moving average. So really looking for the shares to head up to as high as 3 pence while they hold above the 1.8 pence area over the near term. On to a couple of stocks which seem to be in a similar position. First is Gfinity, which obviously, if you look on the left-hand side of the chart, is not a star performer, but we do have bullish divergence. That started back in July, so that was the first sign that there could be a turnaround. So we had the lower lows for the end of July, but higher RSI, and the shares did actually respond in kind, although they faded after that. Second attempt now to get its act together with what I call the sideways shuffle above a rising 50-day moving average. So consolidating with the lows or the intraday lows above that 50-day line. That's around 0.075, and above that 50-day line, we're looking for progress up to as high as 0.2 pence by the end of next month. I suppose if you're cautious, you might wait for an end-of-day close through 0.1, but the real trade here is the combo of the bullish divergence line and the rising 50-day line and that consolidation that we've had. Moving on to Gildy Sports. Here we've got a situation where the shares have also broken out, well, they've broken out of this falling wedge, had that in place since April and closed above the 50-day moving average at 0.63. Bullish divergence there with the lower low for the end of August, which helps. That suggests that at the very least we could head up to as high as 0.9 pence by the end of next month, maybe filling that gap down that we had back from April, and also maybe even heading as high as or getting near to the 200-day moving average. But the turnaround scenario here in force while we're above around 0.58, as that was the June support for this stock. Stock which I missed out on Friday, which I've covered before, but missed out on Friday, which is slightly disappointing, is the Great Southern, great looking chart. So we had basically this triple bottom for the shares March through July, gap to the upside in July, and although we had a gap down at the end of the month, we've also had another gap higher to end the last week. View now is that at least while we're above resistance on the way down, which was around the 2.7 pence area, looking for the shares to head as high as the top of that broadening triangle from May last year, as high as 5 pence over the next 1 to 2 months, and maybe even sooner than that. You can also see the RSI helping as well with an uptrend line there from way back in January, and that right-hand handle and the golden cross that we had earlier this month between the 50 and 200-day moving averages also backing up the idea of a big move towards 5p. Moving on to a stock which I covered during the week, and it's back again on the basis that had a good close, opened at the low, closed at the high on Friday. We're looking for HUI just to break back above the 50-day moving average around 5 3/4 pence, or just maybe call it 6 to be safe. Above 6, looking for 10, which is the top of that broadening triangle from back in May. And once again, bullish divergence in force with the lower August lows, higher RSI low there back earlier in the month. Stock which is looking tantalizingly interesting at the moment is Jadestone. Obviously not a great start to the year, but maybe this autumn will be a good one for it. W-shaped reversal here, so breaking the neckline, holding above the neckline on Thursday, and then breaking through into the gap down territory that we had at the end of last month. View at the moment is above that neckline at 26.5 pence, looking for up to 37 pence, and actually secretly looking for much more, but let's see if we can just deliver on that with the bullish divergence backing it as well. But a nice, what I call, handle on the right-hand side of that W-shaped reversal, so looking decent on Jadestone. A stock which I thought would be a slow burn, but looks like it's going to be a rather faster burn with the unfilled gap to the upside on Thursday and closing above that gap day for Malvern. Here we've got rather extended pattern here, so this is for the patient. Broadening triangle there on the daily chart from the end of 2020, good old days of the pandemic, and above the recent break of 20 pence, looking for 32 pence as soon as the end of next month. Rising 200-day line, but it's interesting that the 50-day line is still not quite on the upward trajectory, but extended bullish divergence line. So the break there was basically back in May around 16 pence, and then the break out at 20 pence this month. Moving on to Mode, which continues to defy the skeptics. V-shaped bull flag bounced off the 200-day line at 1.1 pence. We're basically looking for the shares to remain above 1.5, and while they do, head towards the top of that rising trend channel from the end of January as high as 3.25 pence, and for that to happen as soon as the end of next month. Another stock I missed out on during the week due to either being too busy or maybe too forgetful is Ovoca Bio. Here, Malvern type turnaround with the shares breaking recent resistance around 10 pence above 10 pence. We're looking for 20, which is the top of that broadening triangle from the summer of 2021. And once again, actually, you can draw an extended bullish line in the RSI window, which I will try and do now. And that's been in place since last autumn, so a long-lived feature there on the daily chart. Moving on to Panthera, which I covered obviously in the wake of the news that the company had, but it's worth following up on the basis that the shares have managed to close the week on a high note. That high note was the intraday price action that we had for the stock, and unfilled gap to the upside, broken recent resistance around 8 pence, closing the day basically on the high, or at the high actually, and initial target here was up to 9.5 pence while we were above the 7.25 pence area. I think we can upgrade that now to an April 2022 resistance line projection as high as 13 pence, and hopefully that could happen as soon as the end of next month with that very strong weekly close that the shares had. On to the last couple, and first one is one which probably not that many people might believe in at the moment. Here we've got Pantheon. It looks as though there's some positive noises here. First one is the way that we've got an uptrend line in the RSI window. Second one is the way that the shares managed to spend most of last week, or the latter part of last week, above the 50-day moving average at 12 pence. And while they're above that, we're looking for not only a reasonable move to the upside, but one which could actually be as large as 20 up to 23 pence, which is the top of a rising trend channel from back in May. I suppose the worst case is that we would just head up to 16, 15, 16, and then come back down again as the sellers come in. But interesting there that we managed to remain above that 50-day line at 12 pence. Finishing off with a stock I spotted at the end of last week as well. Revolution Beauty, just breaking out of that triangle that we've had since the beginning of July. The resistance line, or the triangle, broken there around 29 pence. Above 29, we're looking for as high as 42 pence by the end of next month, in what looks to be a nice turnaround there for the shares over the recent past, but bounced off RSI 50 ahead of the push higher on Friday, so that's a positive as well. But above 29 up to 42 on Revolution Beauty. That's it for me today. More updates during the week.